Welcome everyone to today's market recap. Today is June 11th, 2024, the day before CPI, and wow, today was actually way more interesting than I expected. I mean, I was not expecting price action to be so good today. I got a 6-to-1 RR trade today, and I passed my funded account, which is a big deal because I've been working on passing this funded account for the past month, and it's honestly really nice to have finally passed it. So I'm be looking at exactly what I saw in the morning. I haven't exactly looked at the afternoon completely yet, but I've heard good things about the afternoon as well. So we're going to take a look at exactly what happened throughout the day. On the left hand side, I have the 1 hour chart, and on the right hand side, I have the 1 minute chart. I like to use the 1 hour chart in conjunction with the 1 minute chart because I like to mark out 1 hour key levels, because to me that's really what I use in order to scale down and then find my exact entries. I use these 1 hour key levels as a requirement for my lower time frame entries. So in the morning, it's about 8 a.m. Eastern. Let's see. Boom. Around here, 8 a.m. Eastern, this is when I woke up. It's around 6 a.m., 7 a.m. my time. And I marked out these two gaps. So I marked out this 1 hour bullish gap. And then if I go on to the 2 hour, there was this 2 hour bearish gap. And yeah, there was a 1 hour one as well. But the 2 hour one was more significant. It was a little bigger, so I wanted to use the 2 hour one instead. And then there was also this 4 hour order block, so let's mark this as well. So I marked, these are the three things that I had marked really for the most part. So then you'll see, if I go back to the 1 hour, and then zoom back in. Now we are on the 1 minute chart. And so price was moving around here. Wasn't going to take a trade until either of these key levels got hit. And so you could see right around market open, price did come up into this range and hit the key level that I was expecting it to hit. But if you zoom in, you'll notice that there wasn't actually a very good entry at all. Price came up into this range, and then by the time it got to inverse this gap, it closed all the way down here. And so for me, that didn't make any sense for me to enter this, because what am I going to target this? And then my risk to reward is like, it's like negative. So it was not, it's 0.44 risk to reward. That's not a trade that I would have ever taken. So I mean, unless you maybe entered off of some other additional confluence with a lower time frame entry, maybe you could have done that trade, but that one wasn't for me, and I would not have known what to target, because I mean, I would probably wanted to target here, and that, I mean, but I was completely right that price would come up. I marked this out right before, this was before that price came up here. I marked this level out, and it came up here, reacted off it, and went down. Then I also had this 1 hour gap marked out, and you can see price came in here. And this is something that is a learning experience for me, because I was definitely just wanting to get an entry. So I saw price fill the gap, and I saw it do this 30-second inverse, and I said, oh cool, I'm going to enter here. And this trade actually was a loss for me. And I mean, it was exactly what I got myself into. It wasn't a very high confluence trade, but it was a trade that could have worked. But then instantly right after, we had this very, very high confluence trade, and this is the trade that I ended up taking right after. This was a 6-to-1 RR trade for me, and it was beautiful. So if I go back, I'm not going to pull up the S&P, but Basically, there was SMT at this low after filling the 1 hour gap, and then you'll also notice that the low. So let me get rid of this for now. The low here was the midpoint of this final move down. So this gave me a ton of conviction. This is what I call a mean threshold, right? So perfect reaction off the mean threshold with SMT. At a key time going into the macro was 9:56 a.m. So like this other trade, like I didn't need to take it. It was more just like, oh, if it does react here, I'm gonna feel like I'm missing out. So in general, did I need to take this trade? Was it high confluence? No, I didn't need to take it. I mean, the opportunity was coming, and I simply just didn't want to miss out if there was an opportunity beforehand. And the problem is, that this kind of entry could have worked. It just it was a little premature, and I think more often than not, you're gonna regret taking those trades that are premature than when you just like actually wait for the better entry. So in the future, maybe I will be more hesitant to take this trade. But on the flip side, that trade that could have worked because it did fill this whole imbalance and it was ready to go back up. So I'm honestly okay with that loss. I think that was fine. But is this way higher confluence? Absolutely. So SMT at the low, mean threshold right here. And what's even crazier is not only is it that mean threshold, but also this giant 4-hour candle. If I pull this over, you'll never guess. What was this? It was the mean threshold of the 4-hour candle too. So it was perfect in every way. It was the bottom of both of these mean thresholds, and I didn't know that at the time, and I wasn't going off that higher one because I didn't see it. But I realized that after. I'm like, holy crap, that was beautiful. So here's the entry, okay? Once this 1 minute inversed, and I might have actually done the 30-second, I can't remember, but it's about the same trade. I went long, and I didn't put my stop to low because I knew that if this was gonna work, it was gonna have to start moving like right away, and I was willing to take that risk. So I put my stop probably around there, and I knew that this was a key time for a high time frame reversal. So I was anticipating price to like do a high time frame reversal. So I entered there and I waited until price got to these highs, which, I mean, are these relatively equal highs? Not quite, but this all is LR. So I was like, this is like decent probability of playing out. Not 100%, but I was willing to take this risk because of the perfect reaction that we got off the mean threshold, the 1 hour key level, the SMT. It just seemed like it had a really good chance of playing out. So I entered, targeted those highs. I kid you not, I just held this. I held this all the way until those highs. And so my risk reward was 6-1. That was about my stop. And I genuinely just held this whole thing. Because I anticipated this to be a higher time frame reversal because of this 9:30 to 10 a.m. Judas swing. It also aligned up very, very well with the ICT fib levels. I mean, maybe not very well, but I knew to expect manipulation around that time. And so with that 1 hour key level, I was like, all right. It didn't line perfectly, clearly. Yeah, it didn't line perfectly, but the way I saw it was, this is manipulation, this is distribution. It was very, very clear to me that that could happen. So yes, this was kind of a manipulation, but it wasn't beautiful. I mean, I think this was beautiful because this had SMT. This hit perfectly at the bottom of the mean threshold. Internal sweep, right? So this is a lower low, like on an internal low time frame. There might have even been an external sweep or external SMT. I can't remember, but yeah, I targeted that high, and so I didn't trade PM, but maybe we could look at it real quick. But this might be a little less smooth because I haven't looked at it at all. But we could back test it real quick. So, I did look at something that was a possible trade. So you can notice that like price came up, took out all this LR, right? And then after doing that, it pulled back. And where did it go? There was no 1 hour gap. So where would be the next logical place, right? The 15-minute gap. So you had this 15-minute gap, and you had this very like unprofessional looking order block. Maybe that was a 1 hour order block. Should we look? Not really, but you know, you can just see this move down and see that's an order block, right? So price comes in. I haven't even looked at this, but here we go. Internal sweep. I'm very curious if this was SMT. I mean, if it was, it'd make a lot of sense. Let's pull it up real quick because I am very curious now. If this was SMT, this would have been an amazing trade as well. Like, amazing. I try not to use 15-minute key levels, but in certain situations, like in a situation like that where it's perfectly doing everything right, I would be very, very interested in using 15-minute key level in that scenario because there was no 1 hour gap. It was respecting it. It was, doing everything it needed to do. So this was 11:43 and 11:50. 11:43. 11:43 and 11:50. That one wasn't SMT, but you'll notice that it eventually became a higher time from SMT because this continued to trend up while this continued to trend down. So you kind of got confirmation as you stayed in the trade. So then this will be your entry, this 1 minute inverse. Then you go long right here. I did not enter this trade, but I'm just showing for purposes, right? So you enter here. If I go over, I'd probably not put my stop that low because there's no point really. I'd probably put my stop I'm just trying to be realistic because I'm not entirely sure, but maybe like that. And then you probably target, I don't know, maybe like this high. And there you go. That's a 4-to-1 risk reward trade right there. That one's not one that I got because I was off the charts, but there you go. Could have got that. One of my friends took a short in here. Not entirely sure what he saw because it's hard for me to justify shorting when it's all the way up this high. But I know my buddy shorted this up here, and then it just kept distributing up the rest of the day. So hopefully you found this video helpful. Maybe you learned something. If you have any questions or if you have any questions or you want to ask about anything, leave it in the comments below, and I'll see you in the next one.